The Fed is creating zombie companies. Is the Fed feeding an army of broke companies that are getting ready to rise from the dead and prey on our economy? Will this make things worse than what COVID-19 already has? Or will it be an effective way to counteract the pandemic's devastating economic effects? We should all pay attention when the Federal Reserve, Central Bank of the US, makes a move, as its impacts will certainly affect us all. In today's video, we'll cover the most recent actions taken by the Fed, and we'll discuss the possible unwanted outcomes and how they will affect our lives. Will the pros outweigh the cons? Join us and find out. But first, please give us a like, subscribe to our channel, and hit the notifications bell for more videos. What has the Fed been up to lately? Most of us are already aware that the Fed bailed out most of the companies in financial freefall that were hit the hardest by the sudden halt in the economy due to the recession by the COVID-19. These parachutes, which were deployed in early April, came in the form of an unprecedented level of lending to states, local governments, and companies, all backed financially by the Congress and the US Treasury. When Jerome Powell, chairman of the Fed, gave the announcement, he also stressed that the central bank would keep lending their support to companies no matter what, until we all managed to get back up on our feet on our way to a solid recovery. What started out as a $1.6 trillion investment by the Fed that would help large critical organizations like state governments, banks, hospitals, and airlines, then transformed into a $2.6 trillion parachute as the Fed decided to cover the high-yield market, therefore providing aid to small and medium businesses as well. This has already had some important economic impacts. On the one side, it had an immediate positive effect on the market since it gave investors that extra bit of confidence they needed to invest, and we saw the markets go up. On the other hand, it helped many companies that were struggling due to the lockdown survive through the financial crisis. But what if this actually isn't a good thing at all? Are these bailouts good or bad? As always, when it comes to national policy and economics, the first thing on our mind is, what does all this mean for us average Joes? Well, this has had a series of different impacts so far. For starters, federal funding is the only thing that has enabled many businesses to remain afloat, allowing them to be able to pay the wages without generating revenue. In other words, it's the reason why most workers are still getting their much-needed salaries at all during lockdown. Furthermore, these relief policies are also probably the only thing that have had the ability to dampen the pandemic's economic blow. This means that, thanks to the Fed's early actions, getting the economy back to an acceptable level of performance once it opens could be a matter of months instead of years. The Fed certainly won't be able to avoid the country entering recession, but its actions could, at the very least, prevent us from going into another Great Depression, which is quite reassuring. But don't go thinking that it's all rainbows and ice cream cones. There is no magic bullet to fix all of which the coronavirus has broken, and these are, at the most, transitory measures that can only go so far before things take a nasty turn. More on that later in the video, so be sure to keep watching to the end. What is the dark side of the Fed's actions? The gist of the Fed's lending policy is that they will help businesses stay in business no matter what. If a business needs a loan, the Fed will provide. And if that same company messes up and needs another loan, the Fed will still provide. This sounds great in theory, but it has two major drawbacks. One, if the Fed isn't careful who it lends money to, it may end up losing if borrowers aren't able to pay back. This could very well happen to the Fed, and there's nothing they can do about it since no businesses today can be sure that they'll make it out of the recession okay. Number two, because of what we just mentioned, it's in the government's best interest to have all those businesses up and running as soon as possible so that they can repay their debt to the Fed. Considering that it's also the same government who decides when and how to reactivate the economy, the risk of businesses defaulting on their loans is a very strong incentive to push for a premature opening of businesses amidst the pandemic. as we were horrified to learn firsthand. Reopening ahead of time when without proper preparation can cause a worse wave of coronavirus infections than the first one that hit us, which is exactly what happened in June. Number 3, companies that do benefit from these loans are only piling up debt over debt over debt, with a real risk of a rare economic crisis called a deflationary spiral that worsens the burden of debt. Owing more and more money could make it impossible for most businesses to recover, even if we manage to get the coronavirus under control. If you want to learn more about the deflationary spiral and the looming currency crisis as one of the scariest economic aftermaths of the COVID-19 pandemic, click on this video link popping up on the top right corner right now. There's really no way to paint a pretty picture of our economic future. In any case, it all boils down to whether we can find a working vaccine or a cure to this pandemic before the lending Fed turns into the walking dead. In comes the zombies. So, what's all this talk about zombie companies? Well, when we picture a zombie in our heads, we see a messed up, rotten thing that isn't alive or dead, and whose only existence is limited to eating flesh off the living. Well, a zombie business is very similar in the sense that it's a company that's already dead, that can't possibly recover by itself because it's totally broken, and it won't recover by borrowing money either, because the debt burden is simply too much to handle, even in the best cases. So it's much like a zombie in that the only thing a zombie company does is eating up borrowed money without producing anything and without being able to pay it back just about under any circumstances. Speaking in more technical terms, a zombie company is a business whose profits are not enough to cover its debts, services, and costs. In other words, they're working at a net loss. Under normal circumstances, these companies would have already crumbled and disappeared. But access to low-interest government-backed loans keeps them on life support, while the debt just keeps piling up. There are thousands and thousands of zombie companies in the US already, but there's a big chance that the Fed's actions could create many more. If we think that this doesn't have anything to do with you, think again, because it will have an adverse impact on all of our lives, not just on the zombie CEOs or their employees. Keep watching to learn why. The dangers of zombie companies. The biggest threat that zombie companies pose is not so much what they will do, but more what they won't, which is pay back their loans. The Fed has pledged more than $2 trillion as a parachute to help businesses cope with the pandemic. Since zombie companies are unlikely to pay it back, that could make the federal government $2 trillion short. So much government spending has to come from somewhere. And who do you think will end up paying those loans? The taxpayers, of course. So we'll probably see a rise in taxes, which is pretty bad considering the looming recession. Now, to be fair, most of that money is making its way to many households who desperately need it right now. There's also the fact that we're all in this together, and helping each other out is the only way we're going to make it through. But how long will it be until an unscrupulous CEO sees the opportunity and starts draining the system for their own benefit without any intention to pay it in the first place? The second scenario would be that the government doesn't raise taxes, but keeps printing out money in order to be able to cope with the trillions of dollars it needs to feed zombie companies. In this case, the excess in currency will more than likely cause a drop in the dollar's value and cause inflation. This isn't hypothetical, since it's already happened. As the Fed announced its entry into the high-yield market, which gave even more small businesses access to easy loans, the dollar slumped. Looking towards the future, the Fed has its work cut out. Make loans easy to get, and it creates zombie companies that could crash the system later down the road. Add more restrictions, and the funds won't reach the majority of small businesses and their employees who desperately need it and who are essential to reactivating our economy. Do you think that the Fed should limit or control which companies get access to loans and which don't? even if that could mean more closures and more people on welfare? Or should they carry on the path they've chosen, even though it could mean more taxes for everyone or a weakening of our purchasing power because of inflation? Leave a comment below and join the discussion. While you're at it, support us by giving us a like, subscribing, and hitting the notifications bell for more great videos like this one. Before you go, if you want to learn more about the looming currency crisis and the deflationary spiral we mentioned earlier, check out this video that's popping up on your screen right now. At the end of that video, we'll cover what you can do to prepare so that it doesn't catch you unaware. Thanks for watching.